What is going on, guys? Welcome on into today's stream. We got a pretty wild day. We haven't really had, at least compared to yesterday, we've got a lot more volatility, at least in terms of the ups and the downs. We started the day off with a big upside move. This is looking at IWM, the Russell, which I wanted to start here because it gives you a better representation of where we're seeing much more strength. So this is yesterday's bull flag, essentially, in the afternoon. Big move up in the morning. Pretty much consolidation and chop all afternoon. Really, once you got to 11 a.m. Eastern, it was like, all right, the move is done. Then we had a big move this morning as the market rallied after we had a gap down across the S&P and the NASDAQ off of Google, Microsoft earnings. Google missed, Microsoft not as bad, but then Microsoft dumped off the call. Google dumped a bit, and so they opened up down pretty bad, which we can cover them. Google's down 9%. Microsoft right now, as we speak, is down about 7% or so. So here's the S&P. I'll pull that up so you can at least see the price points. So this is IWM. Here's the S&P now. A lot more volatility. Now, however, even though we had a lot more volatility here on the S&P, we are sitting as we speak right now at a pretty interesting spot. Down to yesterday's aftermarket or after hours lows and this morning's pre-market lows around this 381. We came down just under 382, down to 381.50 just a few minutes ago, and we were starting to bounce right here. We've pretty much had a sell-off the entirety of the late morning into the afternoon, I would say the afternoon, Eastern. So once we had this big move up, hit up into this, believe it or not, I guess this zone we have charted out, which is funny that we look at it now, right up into this 387.50, which is the start of this zone. As I zoom out, what is this zone about? What do we got on this zone? It's the start of this zone, and what we have here, if we zoom out, it's this area that we came down to. It's like that 390 area that we highlighted on the chart is more of 387.50 up to 390, 391, right? It's it's a couple dollar range. Not a good look on the daily. Now, of course, this could change based off of earnings that we see to finish off the week. We have Ford, Meta today. Not anything that I think should be crazy, right? I'm not expecting much off of Ford and Meta earnings. That's going to be massively market moving. But after Google and Microsoft, I think there's a little bit of concern for what's going to happen with Apple and Amazon. And so you're seeing weakness across those stocks as well today. And so you can kind of see at least for now, right, we may be looking at least a pullback off of where we are. I mean, hey, we had a pretty big move off the lows, right? Down to 348 on SPY, all the way back up to 387.50 today. And if we pull back, let's say down to back in the 360s, it wouldn't even be that. Realistically, it's actually a healthy move. The question is this just that quick little bear market rally for new lows, or are we going to try to base around here and make a bigger move up in the coming weeks? And I think the market seems like it wants to do that, but the earnings, at least so far, are what's standing in the way. Reason why, if you jump across and look across the board, DXY, the dollar, down under 110. The dollar just plummeted. The dollar just said, screw this trend line. And instead of just saying screw the trend line, it's well, screw the 50 SMA as well. That's substantial because that has been the spot. Now, of course, let's see what happens the next couple of days. But if we lose that 50 SMA on the dollar and and hold below and confirm below, that's been our bounce zone this entire year. I guess going back to February, March, for a while, for over 6 months. So that's good for, at least you would think, for the stock market. That's good for gold, silver, the metals, good for Bitcoin. And then if we take a look at the 10-year, now the 10-year is sitting right on that 4%. So this 4% was a resistance on the 10-year yield. Now it's acting as support. So that's going to be kind of your crucial spot, at least right now as we speak, on the 10-year. So everything has been kind of coming down, believe it or not. And so it's these things that have been holding the market back are reversing, right? And so even though today markets are technically down off of those earnings, we have some crazy spreads. IWM, the Russell 2000, is up 0.9%. It was actually up a lot more earlier, 2% or something like that. QQQ is down about 2%, and the S&P is down about 0.6%. Okay, so obviously big weights across QQQ in Microsoft and in Google, right? So that's why that's down the most, as those stocks are still down pretty bad. But outside of those names, actually some decent support across the board. So believe it or not, right, it's actually not looking terrible. So that's where we're sitting at today. Believe it or not, the Russell's up. So you're seeing some really good strength. The Russell pretty much broke that 50 period moving average and then is now holding that as support as we speak. And that's where we're kind of at. So kind of a higher low based off this morning. So right here, this looks like 179, like 15 is your area to watch as a base for the rest of the today. And we'll see how that holds up overnight and whatever after the earnings that we have from Meta. Mullen Automotive. We have, to be honest, we haven't had a lot of these like spam squeeze things going around in a long time. And Mullen is, I would say a piece of crap, but doesn't mean it can't go up, or as we've been talking about. And actually, it's holding up pretty well. I wouldn't be surprised. Again, if this market stays, if the risk on trade, meaning that the 10-year comes down, we get DXY staying down, and the markets are generally holding up okay, like we saw back in August, there were some pretty big moves. So Mullen right here, it looks like about 45 cents is your risk level if you wanted to trade it to the upside. Be careful, okay? Be careful with these things, because once the backside establishes, like we've seen, just go back and zoom the charts out, right? If you were in Mullen back in here and you're like, I'm about to buy the dip, well, guess what happens, right? You could be down this entire way. And if your average is not able to make up for it, which first off, you're just adding into a loser, you could be screwed. So play it off of this level right here. 45 cents is a spot. That area breaks. But when you get these big moves, stock has a ton of shorts in it. A ton. I mean, everyone looks at the stock and says, it's up, I'm going to short that crap. So when they do that, you're asking for trouble at some point, hence why you can see some big moves. But right now, we are seeing that, buyers are stepping in around, just under 50 cents, and it's kind of holding around that 50 cent level. So that's your guide, at least for now. Bad tech day, but cheap tech is better than expensive tech. Fear and greed and the greed. Yeah, let's say I haven't checked on that in a couple of days. I feel like extreme greed on put call ratios. So you're seeing, at least based off of put call ratios, people are coming back into this market and trying to buy, or at least they're coming back in and buying a little bit, right? This is down on the 5-day average, down to 0.86. That's a pretty good reset. So it's not surprising. I mean, if we pull back next couple of days, this earnings cycle is, provides a nice pullback. It wouldn't be super surprising to me because of at least seeing this resetting a little bit. We're getting some better strength off the bottoms, right? We're getting some rebounds and bounces. However, if it is a bear market rally, who knows how long it could last, and they tend to be a little more aggressive than people think. And I think we've seen some pretty aggressive moves to the upside anyway. So, I mean, you're kind of getting at that right now anyway. But that's the deal across the board today. So, yeah, we're back into neutral, borderline greed. There was something that I did want to pull up, and that was the Fed. Let's take a look at the Fed, because I think in Canada, they decided to do a 50 basis point hike versus a 75 that everyone was expecting. So let's take a look at the Fed. Yeah, today now the Fed is expecting at least next week's meeting, about a week out, literally a week out from today. They're expecting to do a 75 basis point hike, but there is starting to be, I think after that Canada news, they're starting to say, hey, or at least the market's starting to potentially price in a potential 50. However, if the 50 actually hit, like if we got a 50 basis point hike from the Fed, pretty good chance that market's going to rally pretty hard off of that, like no matter what. So we'll see if we get it, but that's also potentially partially why maybe the market's up the past 2 days, or at least is helping keep the market up the past 2 days. So that's where we sit. Now we have Facebook or Meta coming up in, let's see, in about, I'll pull it up. Let's pull a chart up and see how it's doing today. It's down about 6%. So it looks, oh, wow, that's pretty bad. So essentially this afternoon, we had a pretty big rally. I mean, it gapped down based off the Google and Microsoft earnings. So it's like, oh my gosh, everyone's freaking out and panicking. But then it bounced back a good bit, got decently close to, where it was yesterday afternoon or up into that range. And has been in this, I mean, this is something that we haven't seen. And this is pretty nuts. Look at this downtrending sell-off. I mean, that was a very controlled, seemingly algorithmic type of sell-off to me, if you ask me, from what we're seeing right there. My goodness. So trying to bounce a little bit right now into the close. Is it overdone? How much, is that overdone? I don't know. I mean, that seems like algos to me. But if we zoom out on the chart, let's see where Meta's at. I mean, big picture, you're in this kind of range, right? And this range that we have charted out is between the COVID lows and then the 2018 lows, two, decently sizable pullbacks or corrections in the market. And those were the levels that Meta came down to. So 137.50, and then down, which was the COVID lows, and then 130 or then 122.50 is the 2018 lows. So we'll see if it ends up. I mean, we're going to get a move most likely of Meta, to break one of those directions. Either it's going to break back up over 137 and have upside to talk about, or we're going to crush down below that level. If that's the case, not sitting here to say what to buy, I don't own any Meta, but if that's the case, you start thinking about maybe like this is a stock that starts to really get your gears turning if you believe in Zuck and all that stuff. And I don't know, I haven't followed them close enough to say I'm, a massive like metaverse, like all this stuff. But hey, like if that ends up panning out in the next like 5-10 years, it's not something that's going to happen like tomorrow. And you can see the vision and how they're adopting and how they're going to adapt over time. Like this starts to get pretty interesting. I mean, it already is, honestly, but it starts to get really interesting if you're somewhere down in here. I mean, this is down below 2018 levels, down below COVID levels. I mean, you're down into levels that we have not seen potentially since like 2016, right? If we have a bad earnings year on Meta. So it starts to get really interesting. Obviously, there's more risk there in the short term, but we'll see. So then again, it gets cheaper enough to the point where if this thing comes down to under $100, it's like 10K and it gets you 100 shares, right? So then you can start selling covered calls on juicy option premiums and, minimize your downside if you like it too. So if you can get 100 shares. So if you look across the board today, I mean, up in the top of my watch list here, you'll notice that under the large caps, which is this that I got right here, they're all red except Tesla. Tesla's actually green. Earnings behind Tesla, maybe feeling a little bit better there. But then if you go to the risk-on names, it's actually not as bad. I kind of have Meta as a risk-on based off how it's been this year. It could be, you can put it under the large cap category if you wanted to. But I have it under the risk-on. Risk-on a little bit less devastating today. There's ups and downs here for sure, but there's some green in there, which is interesting. Outside of that, what else do we got? Some small caps that I've been keeping an eye on. We'll see how that plays out. Could be a really nice time. I mean, this is the time of year to start thinking about small caps. And if you're thinking about small caps, you want to be looking at the micro pennies or the true penny stocks, sub dollar level, sub 50 cents, even better. This is the time of year. November, December, January, is generally when they tend to run. So if we're gonna get it, not only are we talking about stocks that are bottom the hell out, right? So if any institutional money, any big money starts to come in, those things can fly and be like pumped, right? Very, very easily. And it can start to pad some of the portfolios and some performance metrics for some funds and big money as they get to the end of the year and to start next year. So that's kind of what we tend to see. We didn't really see it last year though. So we saw like bits and pieces, barely. Didn't really see it last year, but I'm very curious to see if we're going to start getting that in this coming year. So we'll see. Let's see what we got. It's having its worst day since March 2020 when COVID. That's nuts. I mean, you don't generally see when you look. Yeah, here's Google, and we'll take a look at these stocks here. This is the weekly chart. Let me go to the daily. You don't generally see. Oh, that's new lows. New lows just hit on the year for Google. Jeez, my goodness. Oh yeah, we're looking at this. If we get a pullback, or the markets, kind of give some back the next couple of days or weeks, I would say we're looking at sub $90, like $88 is a decent target to have in mind on Google. So we could be very well headed that way, unless the markets get saved massively and then Google just like bounces from here, right? Which is possible. But that's the spot. Not much volume until you get down to about sub 90. It's down in here. So we'll see if we end up getting that level coming up on Google. That's a huge move down, big gap down. Yeah, I mean, in terms of a gap to fill back up, it could be a nice gap. It's a massive gap, but it might take some time. And we got to probably base a little bit and start to kind of build before that just pops right back up, unless Apple and Amazon crush it and everyone kind of runs up in sympathy and kind of bounces in sympathy, or we go into the Fed and the Fed's super dovish or whatever next week, and that could send the markets higher. This could be a good dip buy. But either way, Google under $100. I mean, we talked about Google yesterday a lot, right? But Google under $100 starts to get pretty interesting, I think, as well. Now, obviously, it could come down 80s, 70s. If the market goes down a lot lower, yeah, sure. But if you knew that was going to happen, then yeah, you wouldn't buy it. But if you're operating under the approach that you do know what's going to happen, that's first off, that's not how the markets work. I mean, you don't know. Anyone can literally, anything can happen tomorrow, tonight, today, right now that can completely change that, or, things can turn and flip on a dime, right? And so you kind of got to ultimately deploy a strategy that makes the most sense for your time horizon and, your style. So if you're going to be coming from more of a long-term investing approach, then I don't know how you can't be looking at some of these stocks, some selectively. Now, obviously, there's some that maybe, have room to come down so much more. Start looking at some of these and say, what, this is starting to get to be a pretty good buy zone. I'm going to start averaging in heavier, Meta. Let's look at Meta's expectations off this earnings for today. They're expecting an EPS of 189.6, so almost 190 EPS, earnings per share, and they're expecting revenue to come in at about $27.44 or $439 billion. Now, just because they beat on those numbers doesn't mean the stock has to go up, because technically speaking, if you go to Microsoft, it's more than just that. Microsoft, technically speaking, yesterday comes in and beats on earnings, on EPS, and on revenue, but they're getting rocked. Partially due to the environment, partially Google, and then also partially expectations and also future projections, right? So there's a lot of stuff. There's a lot more to this game, right? Than you hope or than you think sometimes. But we kind of came down, and this is kind of being invalidated right now, but you came down, we had this nice area of consolidation, and after an earnings, give it time to play out and see what ends up shaking out after this. But we pretty much came down here on this, on Microsoft, fell down into this zone from like 237 down to like 233. And then that area also based as we got back above it, back here a week or two ago, based as support for a push higher. And then now we're sitting pretty much right in that zone right now. So we need some more direction. If we get further direction to the downside, this could be a cleaner move, and we're probably going to expect this to come down and at least come down into the sub 230s, 225 area potentially, and dare we even say test some of those lows that we saw a few weeks back if the markets do pull back further from here. But Microsoft wise, drawing this bad boy out or zooming out on Microsoft. Let's go to the weekly chart. What do we got? Yeah, we were looking at Microsoft on the weekly, I feel like a few days ago, and we're saying down towards 215 gets really interesting. Not only is that the 200 period moving average, but there's a nice volume shelf right there too at that 215. Why? Because you had a lot of consolidation at that level, a lot of price action there back in 2020 and 2021. So we're getting back to those levels on Microsoft. See if that gets there. So it'll drop about another $15 or so from today. So still asking for a little bit more downside for a possible better supported bounce zone, right, from a technical perspective, but doesn't necessarily mean anything. Look at Wing. Yeah, Wingstop, my goodness. This thing's a monster. Look at that beast. Wingstop approaching, that's at all-time highs, right? That's all-time highs. We're looking at very closely at all-time highs. So if market wants to kind of sustain a little rally here, Wingstop all-time highs is looking like a very nice possibility. You got to get up over this 175. We can draw that in too. Let's do a zone instead of a line. I'd say this is kind of your area right here. You got to get over that 170 up into that. You're going to see a lot of resistance up here, I'd imagine, especially in this market environment. But if you can get up into there, dare we say build above that, we might be looking at a $200 Wingstop at some point soon, which is kind of crazy. Think about it. They pay a 0.56% dividend too. PDD rebound after big. Let's take a look at some of the Chinese stocks. I speculated, and then we kind of threw out the idea. Yeah, I mean, here's the daily chart. Yeah, fill the gap. Look at that. Huge move back up. And this would have been really interesting. I speculated that on, I think it was a Monday on the stream, that this could be that potential capitulation across a lot of Chinese stocks. Let's see what NEO looks like. That may end up, yeah, look at NEO, right? NEO came down 838. Now it's back over 10, hit $11 today. Pretty big moves back up. Baba's been really weak. Even Baba filling the gap down from Friday into Monday. My goodness. Baba, fell down to 57, 58. Now it's at 68. $10 bounce, just like that. It's a pretty big bounce on Baba. So, yeah, I mean, these things, we had, it was YINN is a 3X bullish China ETF. Look at this. Look at that. We were talking about this too on Monday, and it ended up so far panning out nicely, right? So it had that capitulation look on Monday morning, And then ever since then, that was your low that was established, and now it's been kind of grinding up. You got a little bit more to go to fill the gap all the way back up to Friday, which will get you back up to about $30 or so. So you still got to go about another $4 from here. But pretty solid on those, which is kind of crazy thinking about it, how nasty it's been. But look, here's the China, the yin, YINN is the, I guess, 3X China ETF. I mean, talk about this getting rocked. Now, China's markets have been getting crushed really this past year and a half anyway, really since 2021. But this is just kind of it was selling off super hard. It really started selling off hard back in March. But you were in this pretty aggressive sell-off, kind of tried to consolidate, and then it just absolutely plummeted really since September. And then this definitely looks like, looking back, we'll see what happens in like a year, look back. Is this going to be some sort of capitulation? Are we going to end up, looking something like this on China? Who knows what happens there? But seems like we could be looking at something like that now. Obviously, you don't know it until it's done and after the fact. So hindsight is 2020, obviously, but just a thought. FXI calls would have been good for China. Let's take a look at FXI. China large cap ETF. Yeah, it's probably safer to play large caps too, right? So yeah, that would have been nuts. I mean, in terms of if you were on top of it, I'm not very familiar with all these China stocks and playing the ETFs and stuff, so I haven't really been paying attention to them. So I didn't want to touch them, or didn't really care to touch any of that stuff. But yeah, I mean, looking at some of these, if you were on it on Monday or Tuesday, yeah, this still could have upside, but provided some good moves for sure. So we got about 30 minutes or so until we got Meta earnings, and Ford's got earnings. So let's take a look at Ford. I haven't looked at Ford's chart today. Ford's got earnings too. There's some other ones out there, but yeah, look at Ford. We kind of have this zones charted out from yesterday's stream. Low here at like 1060, higher low here at like 1115 or so. So built a higher low on Ford. You have this zone right here. I guess we charted out. I don't really think that's super nice zone. It was like, it's fine. But what do we have on Ford? How much further can it go? Pre-COVID? Oh, I think we charted that out too because it lines up with these highs here. Yeah, that 1050 is going to be pretty. I'll just draw a line there. 1050 is going to be a pretty key spot. That was resistance back here, double top back in 2019. Also was, once we got above that, back in early 2021, we held that as support, and then have held that area also as support this year. So that's a key. 1050 is actually, now we look at that 1050 seems like a pretty big line in the sand on Ford. If you break below that 1050, you're probably coming down, like 950 or so. There's a lot more volume support around $9, but 950 looks a lot more probable under that 1050. So yeah, they got earnings today too. Let's see who else has earnings. There's a bunch of stocks. Teladoc, that could be interesting. Let's check on Teladoc. I'm curious how Teladoc looks because that one's one that's gotten absolutely destroyed, and I wonder if Kathy Wood is still here on this guy. I'm pretty sure she is. So yeah, look at Teladoc. Look at this monstrous dump on Teladoc. Now Teladoc's back at levels, which I don't know. I'm not necessarily the most fundamental investor, right? Definitely not. But I look at Teladoc and I say to myself, you're back at levels we haven't seen since like 2017, 2018. In an environment, in a world where like, even though COVID was like the boom for telemedicine, telehealth, that's not going away. So either they fumbled the bag in terms of what they've been doing financially, or this could be maybe overdone. So that's kind of my just chart looking at the chart, right, from this perspective. But let's see if we can find what Kathy Wood's got. I'm pretty sure she's got a decent chunk of Teladoc. So let's see. Yes. No, where is it? Yes, it's number 10. On her ARC holdings, it's number 10 in terms of the weight. It's a 4.2% weight in ARC, the innovation ETF, which is a decent amount, but not nearly as high as Zoom. Well, look at Zoom. My goodness. Zoom, Tesla, and then Roku are the top three by far, with well over 6%. Tesla and Zoom over 9% weights. That's a lot. But interesting. Very interesting. She got Shopify on there. She got Robinhood on there. DraftKings. That's a lot of Roblox. Jeez. Let's take a look at NVIDIA's up there pretty high. It's pretty good for it's interesting. Outside of Tesla, I feel like there's not Twilio. Block is up there pretty high. Let's take a look at how ARK is looking. Teladoc, though, off the lows is up like $5 or so off of the lows of the year. So it's made a little bit of a headway off the lows. There's a really big gap on Teladoc. Now, you got a lot of volume to kind of grind through here in the 30s. But if you somehow found yourself over and had some good earnings coming up and find yourself up over $45 a share, there's a really nice gap to about $56. You can get a nice $10, continuation move at some point, next year, dare I say, if it happened this year, it'd be insanely, aggressive. But whenever the time comes of it getting back up there, if it does. So we'll keep that in mind. It's something, just put some alerts on, put some stuff on your charts and see. Bitcoin, let's take a look at Bitcoin. Bitcoin's actually up. Miners are down. Mara's down today, believe it or not. But look at Bitcoin, by the way. And this is, I think, a much more of a product of, simply put, the dollar just, and the 10-year coming down. It's got the risk. You got more of that risk on look. And not to mention, Bitcoin, from a technical analysis perspective here, it's actually like a really nice looking chart. You kind of have that descending wedge look, and you're breaking it right now. So if you draw, it depends on how you draw it, obviously. But if you draw this descending wedge from here, connect those highs. Yeah, let's see if this extends even further. Yeah, no, not really. But from here, from the recent months, from like the past couple of months, from August to August, bounce, this descending wedge just broke literally 2 days ago. And you got some really nice support down around like 18.5. And, from a risk reward standpoint, right? If you are someone who doesn't like want to listen to any noise and you're like, I don't really care, cut the noise, cut the crap, right? You look at this chart and I look at this chart and say to myself, if you're looking for a swing trade, this is a really decent idea. Now, if ideally, this is what I like, everyone's different. I don't like the breakouts. So whether it's a breakout of a trend line, breakout of resistance, whatever it is, I'm not going to say shy away from necessarily taking that at some point, but ideally I would like to get a better entry. So maybe there's more of an averaging in or averaging down method or technique against a certain level that you want to have if you're going to just buy it now. But I'm looking at this and I'm saying if you got right here, right, what's your risk? You're going to risk it down to the lows. It's like 18.5 or so is your risk. And you can be looking at I would say even like a 3-to-1 risk reward is like a very realistic level. That's up to about 28,000. Why? That's a gap down right here. I think 30K is a pretty good target to have in mind for that next leg up. So you got a pretty good risk reward in this play. You can be risking about you risk essentially $1 to make $3 based off of a downside stop loss like 18.4 and a target of like 28.1. You can maybe move the target to like 20 or make the target 29 or 30 or so like that. Probably is fine. I don't think it's necessarily a bad idea. But until broken, right? Until this thing breaks back down, it's a valid trade. So, yep. Kathy, what's fun? Is more risk on. That's what it seems like. It just seems like it's a full risk on. Now, I don't think that necessarily is like, it's like it could do well. Like it definitely could do well, but you could see how if things turn a little bit risk on, she'll do very, very well, outperform the S&P, like way, way outperform the S&P, but it's obviously risky. These adult dating sites, my goodness. Can you explain what gaps? Yes. So all it really is it's like on this chart, like the Bitcoin's, I will look at a stock to show you a better example. Here's an example of a gap though. There's no price action here in this area, in this zone. There's a candle ends and then the next candle picks up and there's a gap down or up from where one candle ends to the next candle that picks up. Usually you only see gaps on like the bigger time frames, like daily charts, weekly charts, where each of the candlesticks is like 1 day or 1 week. Because why? You have overnight gaps because of earnings reports. So stock has earnings in the overnight. And so that's not reflected across 1 day chart price action or 1 week chart price action, potentially if it's a Friday or a Monday. And it could gap up or gap down by the next trading day's open. So you don't really see gaps on like 5-minute charts and 1 hour charts and whatever, unless you don't look at after hours and pre-market hours. On the daily charts and the weekly charts, this is not showing us, like if I go to like the S&P SPY, it's not showing us, let me go to the SPY. It's not showing us what happened in the after hours and pre-market, which in this environment with a lot of news, like a lot can happen in that time frame. right? So that's all it really is. And so do gaps have to fill? No, but they tend to be really good areas to look at for targets back up or back down on a gap fill trade. And that could be an area to find support resistance. Once you fill the gap, let's say you have a gap down, right? Once you fill the gap back up, that could be an area to look at as resistance. And then if you have a gap down and, or if you have a gap up, and then, you open the day up, but you start to come back down, that gap down could be a good target for support to cover your shorts or to buy in or whatever if you're looking for a bounce. Just generally speaking. They're all different, and no gaps have to fill, right? That's one thing people get super excited when they look at gaps and start seeing how it works out a lot of the time and it looks pretty nice and like, oh, this is awesome. But no gaps have to fill, right? So just keep that in mind. I like that massive. No, yeah, I was just seeing Mara pop up my watch list here. And I was like, yeah, it's down a lot despite Bitcoin being up today. That's pretty impressive. But I guess it was up at one point. So if you were in it, technically you had a nice support dip by, I guess, this morning. And then it ripped about $1.50. Yeah, which is not bad. So SPY came down. Let's see what we're going to get into the close. SPY came down. It's actually bouncing really nice, pretty much off the pre-market low area, this morning's low. See if it ends up holding up into the close next 15 minutes or so. I have a TNA long that I got to get out of before the close. Just shares. It's the 3X Russell. BA got, let's see, it took Boeing. Boeing got rocked. Boeing Company. Jeez. Down over 8%. Down like 10% today. What does this chart look like? Wow, that looks horrible. That looks horrible. Oh my gosh. Now, this chart wasn't looking terrible, I guess, like a few weeks back, because you have this low right here, then a higher low with some nice higher lows, actually, the past couple of weeks. But that look right there, essentially at that 50 moving average, this blue line, it broke above it briefly, but you got hammered right back down. That does not look great. So Boeing is still in the doghouse, it seems like. And I mean, this is not like ideally even a great. If this low breaks, like if 120 breaks, probably gonna test the lows of the year, I would guess. Maybe down to $100 if it stays that weak. If this low breaks from this past October dip bounce. Used to wheel Boeing last year, got out for a nice profit. Yeah, I mean, I guess depending upon when you got in, right? If you look at Boeing too, you go back, if you snag this at some point, even in late 2020, you still had upside. It's gotten rocked since though. Tesla, one of the not lone. There's a lot of stocks up today, but one of the plays that's up today. Look at this, up about 1%. Tesla's just kind of slowly chopping to the downside here this afternoon, but it's been pretty strong today, at least this week. Even right, hit down to just under $200 on on the 24th, Monday, and since then been bouncing, been a little bouncy on Tesla. Today it just broke over the highs of last Tuesday, but kind of crazy to see how well this thing. I guess I'm not surprised. It's Tesla, not so crazy to see the thing down like 30% from where it was like a month and a half, about a month ago. I'm curious how Meta is going to be trading into the close a little bit here. Let's see what she wants to do. It's down about, it's still not really moving much. It's down about 5, almost 6% right now. It's pretty nasty. But the thing about Meta too, about going into this earnings, is that the stock is down. Not that it necessarily matters, but the stock is down so much this year. So much. And kind of like we saw with the Netflix almost, right? You have a couple bad earnings, especially when you had some bad earnings and you had some big moves to the downside off of some bad earnings already this year. I mean, how much is priced in versus what's not at this point in time. We'll see how much, negative news is still priced into this bad boy. We're going to see. I guess we're going to find out in the next 20 minutes probably. Amazon misses too. I think everyone's looking at the Amazon Apple and they're freaking out about those guys on Thursday. Here's Apple. Let's see. Apple's daily. Apple caught up into that 152 area and then fell off. Some volume support around 146. But I don't think that, depending upon the earnings, right? I don't think that 146 is going to be a big deal. You know, if earnings are bad, it's going to flush through that, I would imagine. So let's see. Amazon it kind of got close to that 112 area, but 113. It's at 115, almost 116 right now on Amazon. Mark Zuckerberg here on stock price. I don't know. That's the thing. I feel like this is what they kind of said the past couple of quarters, but they're in this point of like, they're heavily investing in the metaverse and they're kind of at this stage, like they don't really necessarily care. Let me get out of this guy before this thing stops me out here. Let's see. Let me just dump this before we gotta get into the close. I had a couple little nice plays, but then I ended up on the small count. But then ended up playing like with some house money on this, and this dip buy didn't end up panning out. So I'm gonna get rid of this before this thing. No, we're getting a nice little flush here to the close. Whatever. Let's see. Back to this guy. Yeah, I mean, the thing about it is that they're heavily investing, as they've said, into the metaverse, right, and whatever. And so they kind of don't really care about the stock price. And that was really what it seemed like back in like February and even back into April's earnings. But we've kind of had, based off of last earnings too, really not a crazy reaction off of last earnings. It was a decent gap down the next day, but nothing like super bad. It actually pretty much kept in line with support from prior months. So not a huge reaction. I think the big reactions on Meta right here, obviously we could always get a really bad earnings and it can be nasty to the downside. But the big reaction, most likely, my guess, is that this is the big reaction already. Like that's past us. Kind of like a Netflix, kind of like how all this stuff kind of panned out. You know, go back to look at Netflix, by the way. It's actually up a lot since the lows. Netflix is, from the lows of 164. Literally 162.71. Netflix is up to it hit $300 today. Hit $300. But you had two earnings, right? Netflix, two massive earnings. And then so what happened after that? Like, you had a decent earnings right here that was like a push upside. I mean, I guess it wasn't like huge. And even this last one was a decent get up, but not nearly as big as other two. So I don't really I'm not expecting, Facebook to come out and Meta to come out with anything like revolutionarily groundbreaking in terms of a move today, because I think a lot of the big moves are behind us, unless they beat, which I don't think that that's going to necessarily happen. There's always surprises, but I really just don't know how much you're going to be able to beat in this environment anyway. So we'll see. This is TNA. We'll get rid of these lines. Get rid of that crap. Today I fumbled the bag on AMD. I had an AMD play this morning. Let's see if I can find it. AMD, the Webull account it's finally done settling. So they settled the cash or whatever. But I had AMD versus 59. So it came down to 59.17. I only got one contract and then I dumped it quickly after that. But this contract was like 100% contract very, very fast today. On AMD, what else did I have? AMD, I had IWM small. I'm just playing it small so you get a feel for the account again. Had IWM this morning off of this zone for the dip buy and then sold into the high, not into the high of the day, not the high of the day, but sold as we push up into the high of the day from where we already established. Like 180 was my target. So it was a nice couple bucks, I guess. And then that was really it. Small count had a nice little win on Coinbase. Coinbase had a nice bull flag today. Let's see if I can find it. Coinbase, we got 7 minutes until the close here. Coinbase was this right here. So Coinbase is 2 days in a row of nice bull flags. You had yesterday. Here's yesterday. I played on the small count yesterday. This is your bull flag right here. Pretty nicely holding above VWAP. A very nice area to risk it off of versus like $70. And then today you had a similar, not as clean, but a similar situation, and not like perfectly on VWAP, but you had a similar situation where you had a flag right here. Looks like about $75 was like your downside risk here, just north of 75. And I played it versus that. I think I got in at like 75 something, and then sold it into that next pop up towards 78. That was it on Coinbase. So 2 nice little bull flag plays the past 2 days. And we've been in risk on, so I've been kind of looking for those types of things. And that might change tomorrow, but for now, it's kind of fun. I mean, I have never really done that in terms of coming in with a clean slate every day. And I've been finding it's a lot nicer. I enjoy it a lot more. You don't come in with any bias or any of that stuff like you would have when you're in positions that are up or down when you're swinging them. So it's a little bit easier to kind of manage, and I like it. So we'll see. Sell puts on Amazon for Friday. Up or down this year? Oh, I'm down like mega this year. How long? I got back in like 2016 is when I first started looking at stocks, and then I kind of got into more of like a long-term investing approach. I did gamble with like options and stuff, but I was more of a came from more of a long-term investing approach back in like 2016, 2017, maybe 2018. Then really 2019 was like I got into small caps, and the progression has been interesting since. So 2019 small caps did pretty good. 2019, 2020, obviously everyone did well. 2021, early in 2021. And then essentially the strategies that I was liking to use and swings that I was playing, right? Obviously since 2021, really since the majority of 2021, they just stopped working. Now, of course, there's always things to adapt. But right now, what I've been liking a lot more is more, which I never really have been, is more on the day trade side of things. Not very aggressive, but more on the day trade side of things because you can come at things with more of a clean slate. So that's what we're kind of the progression is at now. I feel like that's how a lot of people end up kind of going. They kind of get into the market somehow versus this or that and whatever, and then they kind of find whatever they works better for them. For me, I like the clean slate. I like being able to sleep better at night. So live and learn. What else do we have here going on today? So Microsoft down 7. Google's almost down. Was Google down 10 today? No, not yet. It could be if we close the next 4 minutes, like with one more little flush here. Google could be down 10% today. But look at these charts, though. It's kind of crazy to think. I mean, this again there was a day a couple months back, maybe a couple weeks back, that was very similar to this in terms of the price action across the S&P, not necessarily individual stocks. We're seeing it, I think, more in individual stocks right now. But look at this price action this afternoon. I mean, that is just like almost as steady and controlled as you could get. I mean, it's not very common that you see that movement ever. Like, there's always some more ups and downs, inside of a trend, right? That is pretty incredible on Google. Google is going for the dump here. Let's see if we get that 10% down day. We're down 9.6 almost here on Google. New lows are about to hit. Just hit a new low of the day. Let's see if it goes for it. Finishes the day. New lows are hitting now on Google. Let's see if it goes for down 10%. That would be nuts. Get short so restricted. Tesla's it's giving back a little bit. Tesla's at 0.91 on the upside now. XBI had a really good day. I'm going to jump back to that. We got 2 minutes to go until close. XBI still had a good day. So again, you're still seeing some good strength. By the way, this is actually a nice dip buy this afternoon. Why? It was on yesterday's highs on XBI. So this is the biotech ETF right here, right off yesterday's highs. Really nice dip buy. Now, XBI is a little tough because the options are tough to play. You can play the 3X ETFs. The best way to play XBI is LABU and then LABD, LABD. That's the best way to play, I would say, XBI. But yeah, because the spreads are usually pretty big from my experience. But I guess it depends upon what spreads you're looking at. TLT, look at this, another update today. TLT, by the way, looks pretty solid. Does that mean the 10-year is down below 4 yet? It's close. The 10-year yield is at 4.01. It actually did dip below 4 briefly today, but you're going to find that. Let's see if that's going to be an area to watch to see if it ends up holding. Look at this little TLT pop into the close. So despite what you're kind of seeing now is you're kind of seeing somewhat of a shift away from like this move of, oh my gosh, rates, and like kind of subconsciously under the surface, look at that TOT. It ends up being, it looks like last week is that capitulation, which is funny. I was looking at TLT versus like 98 back in here. Ended up going from 98 down to all the way down to 91 like 70 or 91.85, and then now it's snapping back, at least for now. We'll see if it gets back over $100. But that's TLT. That's the 20-year Treasury bond ETF. Annihilated this year. You generally don't see TLT do this bad with the market as well. It's more of a flight to safety, so it tends to do a little better. But it has not been immune at all to this environment, to this market. So that's been kind of crazy. But TLT, yeah, maybe up to like 108 is like a really good bounce target. That might take a while, but we'll see if we get there. But that's kind of where things are going. That's making a nice move down. DXY, the dollar is really kind of plummeting to the downside here pretty substantially. I would expect these things to bounce around a little bit. Like I expect the dollar to kind of bounce back at some point, but those are good things for the market. So you're in this period or this weird kind of limbo where it's like certain stocks are holding up pretty good and the overall indices are kind of jumpy with earnings. But now you kind of can see that you kind of go through these fears, and there's always a narrative, there's always a story, there's always a reason to like, oh my gosh, freak out about this or that. And it's like the Fed here, it's CPI, now it's earnings. As maybe the CPI and the Fed, maybe those fears start to kind of wane a little bit, and now I think that's probably going to be where you're going to see a lot more fear in the reality into next year. Is earnings are probably more in danger than continuous hikes being the problem. My 2 cents maybe though. Let's see. Let's jump over to Meta. It is now Meta time, right? It's going to probably be a little bit until this drops. We'll see if we get it anytime soon. Forge to have earnings soon. There's a bunch of stocks that have earnings. We'll see if we get some decent news here. Let's see. Got another interesting after hours. Yeah, I think it will. Need dollar down, bond yields down. Then when J-Powell stops interest rate hikes, you rally hard and hold it. No, yeah, I think that I'm really kind of curious next week to see what he says. In this meeting. Does he give any signal? Does he give any little hint? Because they don't want the market to go up. They don't really necessarily care once inflation's down, right? It doesn't matter to them. But so maybe that's kind of your window, right? If inflation really starts hammering down, and then you get a Fed kind of slow down or stop on top of DXY, the yields coming down, all that stuff coming down, you have a pretty good setup for a rally. So, you're kind of seeing like under the surface, like small caps want to do it, like individual names, biotechs want to be strong, and they have been, generally speaking, they've been decent. Google's biggest drop since March 2020. Yeah. My goodness. Here's XBI's chart, by the way. If you want to look at like a breakout candidate, this is one that you're looking at right now. Obviously, you got some indicator resistance, like 50 SMA and 200 SMA right here, where like it got above that today briefly, and then it came right back down under that. But XBI is kind of showing that really good relative strength across the risk on names. Not to mention this is generally a pretty hot biotech time of year, right? This time of year. Small caps popping early. Yeah, no, that's what it's kind of been. I think that's what you're seeing is some decent action across smalls and growth and the risk on trades, like, versus the large caps and versus the big name tech, at least with this earnings cycle for now. Russell killing it. Yeah, the Russell finished up today, believe it or not. You had a big rally early on off the lows. NASDAQ gave it all back. What's the NASDAQ? What's QQQ? QQQ was almost green. It got rejected at the high of the day, pretty much, or at yesterday's highs. And then almost tried to go green, and then just like, nope. Let's see. Meta should be coming out soon, right? Nothing yet. No movement yet. Ford, we got Ford earnings coming out too. Not that I really care too much about Ford earnings, but we'll look at them. Let's see if any movement's going on there. Ford Motor Company. No, nothing really. Nothing yet. Quiet. It's quiet until Oh my God, these freaking bots, my God. Quiet until this Meta earnings drops. And then tomorrow is a massive day. Also, by the way, let's check on some of these economic numbers. What do we get? We got home sales today, I think, right? Yeah, new home sales came out today. By the way, new home sales came out today, and they did come in they came in about 10,000 higher than expected. Still down from last reading, but substantially higher than expected there, which is pretty interesting. Tomorrow morning is pretty big. So if you're looking at like, oh, I'm going to swing this overnight, I mean, be careful because there's a lot of stuff that could change, that could, move this market tomorrow morning. That's GDP, Q3 GDP. They're expecting it to be positive, believe it or not. And then we have, on top of that, jobless claims. I think Meta's coming out here. Meta popping up 5%, 6% now off this. Let's see if we get these earnings. There's got to be earnings here. Meta's up 6% initially here in the after hour. So big pop. Big time pop. Nothing yet here. I'm not getting anything yet. But look at that reaction. Hit 140. Just now, let me zoom out a little bit more so we can kind of see the range. It's been in this range from this 137 down to like 122. That's been the spot. Click the beat on revenue initially from what I'm seeing. Meta has beat revenue. Mela TDoc gone. Let's pull up TDoc here too. Let's see their stock reactions. TDoc, that's up about 5% as well, back up to the highs of really today and yesterday. TDoc's booming a little bit. EPS miss. I'm seeing on Ford came in with a miss by 1 cent on EPS and revenue miss. Am I reading that right? We'll pull up the numbers here in a second. So Ford's down a little bit, not much in the after hours. Again, this could be one of those sentiment days where you get a big shift in sentiment right off of, based off of this. And then of course, tomorrow change everything. Here we go. Meta. Q3 revenues come in just north of estimation. So they beat on revenues. EPS did not beat. It missed. They missed on EPS. They see Q4 revenue, 30 billion to 32.5. The estimate was 32.2, so a little on the low end of the estimate there. Q3 Facebook daily active users is at 1.98 billion, and that's ahead of estimation. So there's a positive there. They beat on revenue and they beat on daily active users. 2 billion daily active. That's nuts. Like that freaking there's like 8 billion people in the world. That's pretty crazy to me. 2 billion, like a fourth of the world is on Facebook every single day. I guess Facebook is, or whatever, Meta, pretty popular. It's been, but I feel like nowadays it's like really kind of died out. So look at that. Rip and the dip so far on Meta. It's back down to red. I think that the initial reading was that they beat on, they beat on the revenues, but the EPS came in pretty decently under expectations there on Meta. My goodness. Second move is what counts. Yes, that is true. Here's Ford and TDoc. Let's pull these up. So Ford records $2.7 billion non-cash pre-tax impairment on Argo stake. Ford sees year adjusted EBITDA or EBIT about 11.5 billion. So on the low end of that, they see free cash flow 9.5 billion to 10 billion. So that's a much higher number there. They'd be on that. Teladoc, full year revenue they expect to be around that 2.4 billion number. Pretty much on the low end of expectations. Not surprising there though. Again, Q3 revenues on TDoc came in at 611 million versus a 609 million estimate. So they beat on that a little bit. Let's check in on some of this price action. Whoa, there goes Facebook dumping to new lows. So I think that was the Facebook play here is that they missed on EPS pretty badly. Is really what the whole idea off that initial reading. And of course, we can dive deeper into all that stuff, and I'm sure we can dive. Meta's facing near-term challenges on revenue. So as you start reading these reports a little bit deeper, you start to unpack a little bit more. Not surprised. Meta's facing near-term challenges on revenue, right? Is that surprising? Not really. On Meta. So there's Meta dumping down under 120. So it was up initially 6%, and then it got hammered. Now it's down 8. Market's not down that. SPY is not really moving that much, and Meta's not a huge weight, by the way. Let's see, where is it? Meta is a 0.92% weight in the S&P. Not huge. It's number 16 out of the whole list, so it's not that big. I'm not like, it shouldn't be a massive, I mean, it's a sentiment mover, not a massive market mover based off of what happens here. But again, it can move sentiment. So you're probably seeing Snapchat dumping a little bit as well, right? Snapchat here in the after hours, down about 1.5%. They kind of trade in sympathy, Meta and Snapchat a little bit. Look at that move. My goodness. Popped to 141, and now it's down under 120. Now, the reason why this number starts to get really interesting as we zoom out here, this line that we have charted out, if you zoom back over the past couple of years, that 120 area was, or that low 120s was the low from 2018. Now, we're coming back to the 2016, late 2016 lows. Pretty impressive on Meta, down around 120 now. 115 is down towards that low, so 113 or so. So a couple more dollars to go till there. My goodness, that's a dip and a half. Okay, jump back to this. Let's see. So we got TDOC, Ford, Meta. I can jump back to Ford and TDOC's chart in a second. See if we get any more numbers here, any more info. Here's some more info on Meta. Here we go. Meta beyond 2023 to pace Reality Labs investments, headcount in line with Q3. Change across the board to me. This is what you're going to be seeing across a lot of companies right now. I think that's the first move. And I mean, I'm seeing it, here too. And like, I know from where my girlfriend works, they're doing this too. She works at a pretty substantial company, a pretty big name company. And so like, they're all like adjusting. So it's like they're reorganizing, they're restructuring, they're, in the process, they're cutting people's jobs, but then they're like opening new positions. It's like they're net, cutting jobs, but also like not making it, they're making it more like a restructuring. So it doesn't sound like horrible. That's what you're kind of seeing is happening right now. Holding some teams, flatten head count, shrinking others. Yeah. And that's exactly that right there. Some teams will hold on and others will get shrunk, especially wherever the most value is being made right now. To kind of condense things down and to stay as lean as possible during this time, ride it out. If rates eventually come down, things get better, companies start doing, putting out more ads, whatever, and, you can make more money off your platforms, whatever, cool. As times get better, like that's kind of what you need to do. Google, Meta, a lot of these companies, all these social media companies to get through this type of time. So it's not super surprising. Growth rate of 2023, OPEX to decelerate meaningfully. So that's unfortunately not good, but also like, is that unexpected? Not really. So that's that. That's Meta, some of the Meta news. It's down around 121, down about 6% in after hours. Ford is down about a little about 2%. It was just dipping down here a little bit more than 2, but not huge. I don't really expect Ford to move that much. It's not a massive market moving, stock, but that's that on Ford. Then also Teladoc, we looked at a few minutes ago too. TDOC. What do we got here? Big move up on TDOC. So TDOC's actually holding up on that move about 9%. It was up a lot more too, but it's holding that move up on TDOC. Burns many times pre-market and after hours, never. Yeah, no. What I have found too is that, especially off of times like this, it's like just, it's very easy to get burned. If you're in something, like if you're in like a small cap or whatever, like, yeah, maybe they get a further push on shares you already have, you trim some off, whatever. But holding into the open off of a pre-market play and then holding into the close, sometimes you're just asking for trouble, especially in terms of volatile times like this. See very red end of the week. Yeah, I mean, I think tomorrow, this is where things can get really interesting too, because tomorrow morning you're going to have GDP. I don't think GDP is going to move the markets. I mean, it'll be like, oh my God, GDP is positive, whatever. Sure. Okay. Is that a good and bad thing? I don't know. I don't think the markets really care that much. But jobless claims is going to be more important, I think, tomorrow morning. So the job numbers that you're going to get, here's the thing. If you're looking at like I was saying before, like, I'm going to swing, Teladoc tonight overnight. Now, maybe like that momentum is there. Maybe it has a bigger up day, but just be careful on swinging anything overnight. So you want to swing, Meta short or even swing it long. I don't know. If you're going to do any of that stuff, be careful, because in doing this 8:30 a.m., so pre-market, before the market, this is Eastern time, before the market actually even opens, jobless claims, and we've gotten big moves off of jobless claims over the past couple of weeks. We've had jobless claims come in lower than expected and had a pretty big red day. Not to mention, you also have Amazon, Apple. If these numbers come in and the market takes it in a negative, right? Meaning that technically good news is bad news. Like good news upon jobless claims, like lower numbers there would technically be bad news for the stock market. Meaning the Fed's got to hike more and tighten conditions more or whatever. Sure, at this point in time, I don't know how much more the market really cares about that correlation anymore. I think the market's probably getting more concerned about earnings growth and just growth in general for a lot of companies in the economy, going forward. And like that, those are more the concerns rather than, the Fed hiking rates, because we're getting to the end of that. We're getting closer to the end of that than the beginning. Let's just say that. So this could be a big mover. And then of course, going into Apple, Amazon. So if the sentiment shift overnight is nasty or in tomorrow morning is bad, I mean, who's going to want to gamble or hold, Apple, Amazon going into their earnings as the market's already been taking hits? So picture that scenario for tomorrow. Could be a pretty red day if that's, how things play out. Could be though. But in the after hours, let's go back to Meta really quick. Meta is down about 7%, 8% now. QQQ is down it's flat. It's not really moving much. So Meta's not moving the markets that much here in the after hours. Qs are flat and S&P is actually up. Look at this. The S&P SPY is actually up so far in the after hours. Not really caring about Meta being down 7, 8%. So I fired myself to help jobless numbers. So that's, based off SPY, here's the spot, right? This level goes, you're coming down. So tomorrow, right, what I would want to look for is, we'll see what happens. But if this 381 goes, 380, first target to the downside, that's the high from Monday, right? It's Monday, yeah. And then down to about 378 was this level that I had charted out. Was a pretty strong area it was a resistance back here in early October as well. So yeah, 380, then 378 are the next two spots downside on SPY. If we get that tomorrow, I guess tomorrow could be that type of day. But then again, right, you might think that downside is there, and then all of a sudden, you get a job number that comes in or whatever, or maybe the job numbers send us lower, and then all of a sudden Apple, Amazon beat, and then we're like, oh, and then it's this massive chop, and it's like a period of time that's like meant for you to just burn as much money as possible in the market, which is kind of how things have felt. But like, that's kind of how it seems. Like literally, like this is the time that's like burning out as many, if we are going to rally right into the end of the year or whatever, from pausing the Fed or from whatever, 10-year coming down, DXY coming down, all that stuff, which those look weak as hell. That trends seem to be reversing across those two things for now. Not as much in the yields. Yields need a little more downside to confirm that, but at least on the dollar DXY here, it's pretty decisive move here so far on DXY the past just 2 days. When this thing broke, you got a decisive dump on DXY. So that's pretty impressive that we've been seeing that, but it's a chop city time. So I think maybe get out next week, and then next week, earnings are done, or the big tech earnings are done, less market movers. And then you got Powell on Wednesday. Like, you're getting slapped around left and right. It's like, it wants you to kind of chop and lose as much money as possible. And then there might be more clean opportunities on the backside of like November 3rd or whatever after the Fed. And then, there could be a nice, maybe that's your rally time, depending on what Powell says. Apparently crypto might be starting a bullish uptrend. No, we talked about that about like 30 minutes ago. I think we were looking at Bitcoin probably 30 minutes ago. I don't know. I'm just guesstimating. But we looked at Bitcoin's chart and we drew this out. Like, I do like that. Like, I actually like that a lot. Like, this is a swing. Like, if you're going to swing something, like, yes, I know, like, it hasn't been the great environment to swing. But when I look at Bitcoin's chart, this is not a chart this is the 2-hour chart where I'm looking at. This is going to be a swing no matter what. It's not going to be a day trade, right? So, crypto stays above 18.5. I'm fine. I'm not in, but I would be in, right? If I'm liking a crypto swing or a Bitcoin swing, whatever, doesn't look too shabby. I think there's been a slight tick of losing jobs, small. I think that's the numbers, right? Premiums are dropped. I think I got a couple calls that I sold today. Yeah, I can pull up the Robinhood account right here. So here's the Robinhood account. This is the account that we want to build out to be as fat, chock full of dividend and covered call plays as possible to minimize risk. over time. We have some risk on plays here as well. Probably looking at that into the end of the year until this whatever time frame we'll see. But what do we got? We sold. Oh, they all went through. So I sold a TMF call for next month. I sold a JEPI call for next month. I think these are all like just 5 cents, just to get a free $5. AGQ call. I think I sold this for 20 cents, something like that. Whatever. That's for next month. 31 call, and the thing is at 21, so it's way out the money. These are just calls I hold on that for next month. And then I sold a Labu call at the $10 strike for next week. So I have some next weeks in there. I just didn't sell a sock, so that's the last one. I got to sell a sock, so maybe if we have an update tomorrow, I guess. Maybe I just never get a chance to do it. But yeah, we sold some calls there, so we got a few bucks, made a few bucks that, which again, on the grand scheme of this portfolio, it's not that much, but a few dollars is a few dollars, and I guess as you scale things up, it becomes a lot more substantial. So that's what we're sitting at on the Robinhood. This is Kathy Wood's play. Let's take a look. Go back to Meta and see how. In a perfect world though, what I would like to see is a retest. So we're getting a downtrend break here on Bitcoin, right? This is a nice downtrend break. I like it. I would like to see a retest. So if we do get like a red couple of days, like to finish off the week, right? Ideally, Bitcoin comes back, does something like this, and like 20K is like the buy. Like that I'm gonna put an alert there. It's just like I'm alerted at 20K. If we get down there, let's do that. Let's do the alert at 20K value. Let's do a crossing down alert. So that way I'm going to be alerted to that, because that area this way, if I can get an average, right, bring this down. If I get an average there, that drops my risk down a little better. And you can, ideally, right, in a perfect world, we get a little bit of a back testing of this downtrend breakout, and then it goes. And if it's going to go, like that would be the perfect setup. Of course, it doesn't have to do that. And that would also minimize risk a little bit, more on the Bitcoin play. So something to keep in the back of the mind, right? On a little BTC. So I'll leave that alert on there, and we'll see if we get it. But this right here is a 5-to-1 risk reward, by the way, based off of this. There's 5-to-1. So risk level would be at about 18.4. Downside, if you entered at like 20K exactly, risk level of like 18.4, and then target here is about 28.2. I mean, I would probably target like 29. This is a gap fill right here. So yeah, I would target like 28.5, 29, something like that. That's a 5-to-1 risk reward. Now it might play out over months, maybe weeks to months is your time frame, unless we get a plummet to the downside and Bitcoin flushes hard below that 14.5, then you're out pretty soon. But I do like that. Maybe I'm thinking about it. Maybe I'll just put it in like a different account and just leave it as like that's it. Just put it in a crypto account or something like that, and just swing Bitcoin and put a number I'm fine of swinging on there and just leaving it there, and just that's it. And we'll see. Maybe I'll put it in. Well, there's a bunch of stocks you can play and ETFs and stuff. You can do that too. I think BITO is that Bitcoin ETF. Yeah, and BITO is one. Yeah, BITO ideally here would make a move like. From, let's just do the math on this, right? What's the risk? If you got a little bit of a pullback, BITO, maybe like a 12.50 or a 12.40 at entry, stop loss at like 11.40, so you're going to risk about $1, which is about 8-9% downside risk for upside target to fill this gap up to I'd be about a 40% upside, so that's a pretty freaking nice trade if you ask me. I don't care how long it takes to play out. If it takes 3 months, so what? 40% in 3 months for a 10% risk is pretty good in my view. So BITO looks good. Wouldn't go to miners. Yeah, and the miners could do better. I would probably stay to more like a BITO, probably, my guess, or just simply Bitcoin, right? Mara versus BTC. Yeah, not the correlations are not perfect. Now, of course, if we do stay risk on, Mara could do better. Like Mara, in theory, right, could technically it actually has since July. It could do better, but also like I don't know. The risk reward is maybe not the same. It's not as clean in my view. I don't know. That's just my take on it. I think Mara could be if Bitcoin goes on a crazy run again, Mara will be an amazing short play at some point in the future, maybe next year. I don't know. But it needs to go wild for a bit. Covered calls on big boy stock. Yeah, no, That's the portfolio that we got to get to on the Robinhood. And no, we'll get there, eventually. That's the thing. People expect the thing about, I think a lot of people expect, especially we talked about this yesterday too a little bit, or Monday, I forget when. I think it was yesterday. But in this day and age, like, because that's another thing, because of how bad social media has gotten. Let's go. I'm just going to pull back up on Meta, because of how bad social media has gotten, right? And in terms of, let's say, then the investing and trading, whatever. Oh my, Meta's down 11% now. That's getting slaughtered. 115. This area doesn't look like a terrible bounce spot, by the way, because if you look back on this chart, on the weekly chart, you have a support level on Meta at like 114. Yeah, 113.50. Well, honestly, no, like 114 is your spots. That's actually not a bad opportunity here, down versus that 113.50 area. If you're looking at that, let's see if we can play it here. Is it even worth? It would be a small play. I wouldn't play it with much size, but I would say that this versus the lows is not a bad idea for a scalp play versus that low of that 13.54. Yeah. So we can I'll pull up on Webull for now. I don't think I'm going to touch it, but just leave it up for a second. But yeah, like we were saying about the portfolio, right? Ideally, in a perfect world, we get to the size of having like those big names, like, let's say Google or an Apple, right? Stocks that I want to hold. I don't know. Maybe in a couple of years, that's completely different. But there's stocks that you kind of want to hold. Maybe it's an AMD. I don't know. That's like one of those companies that's like, never going anywhere, and you want to buy it and you want to have 100 shares. AMD is actually a lot more easy to get 100 shares, by the way. It's $60. It's 60 or 6K. It's not as bad. But you can get positions in those companies or in those stocks and sell covered calls every month or every week. I would just sell far out the money. So I wouldn't be selling anything close because I wouldn't want to sell my shares. Obviously, on an earnings time frame, just stay away. Like, if you're concerned about giving up your shares and you're like, oh, we have earnings coming up. Yeah, you could sell calls and they'll be more expensive and you'll get better premiums or whatever. But like, I don't know. It's not like, in my view, it's not like worth it. Did the wheel on Apple. What do we say here on this play, right? What do we think about this? The only problem I have is that this is looking like it's a bear flag to me. Although I do like that. It came down to the lows of that 2016 dip. So if you were looking at this, I don't touch these types of things very often, if anything. If I was going to do it, it would be obviously just shares. And it would be a small amount of shares, too. But your type of risk reward on a Meta right here, you're looking at like, I don't know, from where it's at now, you're going to risk about 2% to the downside, maybe to see, a VWAP touch on a bounce back to, make 5. It's not a bad risk reward on just a day trade scalp right here. Because that 113.50 is literally the lows back from like 2016. It's like it actually lines up with a pretty good spot. Didn't think we'd see that fast, but here it is. So there's a bounce. You're getting something. So look at that. But yeah, back to that stuff about the whole thing, especially on social media too. Because the factor of like the only show the positives, only show the wins, so people get turned off to the downside and they just like say screw it, and you're just getting I feel like the wrong approach. You're not seeing the thought process or how to deal with the losses too. But Meta needs my money. I don't like it. No, I don't think, who knows where this thing goes tomorrow, but like from a perspective of just that individual, if we had seen it and saw it, I don't really care now, but if I was watching it closer, like 5 minutes ago, and somehow was able to snag it at like 114 versus like that 113.30 or that 113.54 risk, like right there, keep that risk reward pretty tight for a little bit of a scalp, maybe it's worth it. But moving away from Instagram nowadays. Yeah, I don't really use Instagram, Facebook. I don't really use Snapchat either. I have all the apps. I definitely like still post sometimes. Or I don't freaking post on Instagram. Probably should, but I do not. Look at that. Here's a hammer down. This looks like a bear flag, to be honest. Similar to what we just saw a few minutes ago too. If this is a bear flag, it's going to go to new low of the day on Meta. So we'll see if it happens. But my goodness, though, that's a monster. Who would have thought, too, that we'd... I guess not. I feel like that was... Everyone thought it, so it wasn't going to happen. on Meta, and it happened in terms of this downside or 12% down day. TikTok, I guess, is where everyone's at. I don't really use TikTok either. My only social media is YouTube. The crazy thing about YouTube is that I look back to me in like elementary school. Is that long ago that YouTube was still around? I think so. Like I think I was in like 5th grade probably, and like you watching YouTube videos, like fail video, like all that stuff is stuff like I still sometimes watch like today. Like if I'm absolutely bored eating dinner or something, like we'll just throw on like Fail Army and just watch just mindless crap. Just why not sometimes? Like it's like stuff that I would watch when I was like literally like middle school and elementary school, I feel like on YouTube, like it's still around, which is kind of crazy that YouTube is still like holding up, that many years later versus like Instagram and Snapchat have kind of come and not that they're gone, but they've kind of come and gone almost in a sense. Discord, Reddit. I've never really gotten to Reddit. I know like my girlfriend does, and like I know a lot of my friends like at least used to. I don't know if they still do. Like I've like never got into Reddit. Like I never really got into Reddit at all. And who knows, maybe that's the thing about Google, right? Google stock going forward because of YouTube, right? If they just take over and it's like, well, YouTube has shorts, they have long form, they've got, whatever, live streams, like you can do it all. Like essentially in reality, like the monopoly there, like Twitch and all that stuff, like you could just do it on YouTube. I guess, I don't know. I never really used Twitch, so who knows? But have a lot of that same. Well, I guess Google's kind of YouTube's trying to copy and whatever works on their platforms and whatever. But so I get it. But in reality, it's kind of like the same thing like Amazon. How they got football now. How you can like watch TV, watch movies. You can buy your food. Like you can do everything. It's like as much as like some will say like, oh, it sucks. The monopoly sucks. Like to the consumer, it's just the most convenient thing to do. Like it's just so convenient. Like I just like it's just nice. So but don't even have cable. I don't have cable either, believe it or not. I find some streams online to watch football games. I'm delayed by like 10 minutes, but or not 10 minutes, but like 10 seconds, 20 seconds sometimes. But I don't care. It's not. The delay is not enough to where like if I had the game up on like the ESPN app, like I would see it on like the semi-delayed stream versus on the app first. So it's not delayed to the point where like I'm getting just ruined by that. I have been where I've been FaceTiming someone who's also watching the same game who's ahead by like 10 seconds, and I've been kind of I've gotten not screwed by, I've gotten let down by that, but I don't care. I mean, really, I don't care. If I have to pay for it, it doesn't matter. I thought about, I did when it came to March Madness, I tend to do the usual, make the YouTube account or make the Google account and then get a new YouTube TV subscription for the month or for like the next 2 weeks. It's like 2 weeks free. I tend to do that every year just so, because I don't want to pay for YouTube TV like for like the whole time or whatever. And then, for the first 2 rounds, because there's so many games and just easier to kind of go back and forth that way. But I guess you don't even need to do that too. You can just have 30 screens and pull up every game on individual streams and on all the screens. My new apartment complex is going to have, you don't even have, what's it called? They don't even allow you to get your own Wi-Fi. They have their own Wi-Fi system throughout all the buildings. So, I mean, we'll see how that goes. But I'm not going to pay for Wi-Fi. I mean, I'm still technically paying for it, the rent, but I'm not going to have to pay for the freaking AT&T, what was I saying? AT&T box. But that's the only thing kind of sucks. It's like $80 a month, at least for me. Like, it's like, it's kind of just like dumb, but you need it, right? Scalping Meta. I am looking at it too. I just think that a move from like this, I like it versus the lows if it can hold these lows. Let's just see what it wants to do. I'm looking at it too, and I feel you on that. But it wouldn't be it would be a small size, right? I don't know how many shares I would really care to even mess with, but I don't know. Let's see. 25, maybe 25 shares. I don't know. 25 shares. Is that like just for fun? If you make $1 or $2, make 25 bucks. Let's see what it does here. Let's see if it comes down and tests that level, that 113.54. And that's that. Have the finger on the buy button. Yeah. Yep. I don't dislike it. I don't necessarily know if I like this. I would have liked the first attempt down there for that move from that like that 114 to like, what was that, like almost 117. The longer it sits down here, I don't know, the more skeptical I am, because it just kind of looks like it. And this is a 1 minute chart, but I guess on the 5 minute chart, it's let's look at the 5 minute chart. It's just like bear flagging, right? Yeah, it doesn't look great. So that's the concern. But I mean, you look at it down 12%. It doesn't mean that it has to, bounce back, but down 12% is a lot, given that the stock's already down like a crap ton on the year. But this looks like it wants to test those lows. If it can hold a double bottom right here, maybe that's worth a shot. But if it can't, And did NVIDIA have earnings? Let me jump back to TradingView. Did NVIDIA have earnings? Is that why? Or they got some news or something? Let's take a look. They're on my list somewhere. Here they are. Yeah, look at that. NVIDIA, boom. That's a big move. Do they have, let's see. Do they have earnings? I feel like that move tells me they had something. Ford is resuming a buyback up to $35 million in shares. NVIDIA's moving higher. I don't see anything, at least here. Let's see if I can find news somewhere else. Meta increasing capex. NVIDIA Marvel jump more than 30% on higher Meta capex view. Okay, that's why off the Meta earnings, I'm assuming. By the way, NVIDIA's chart, they don't have earnings for a while though, right? Their earnings is not until November. That chart looks juicy. I mean, there's the 50 SMA at 136, but they're at 134 in the after hours. That looks pretty good. Is AMD up? Yeah, AMD's up as well. Yeah, those are two. I mean, I guess Sox will be up a lot too, right? Semis are doing well here in the after hours. Little Soxel action. Soxel have been pretty nice. I mean, I've been holding just shares, but from those lows down around the 6 area, man, it's been a nice bounce. It had a 100% bounce back here from 1050 to 22. So ideally looking for like 100% move off the lows before I think about taking profits on something like that, but we'll see. Yeah, I don't know if I like this on Meta, because now you're kind of you're flatlining right here. You have that look of like, if those lows break, it's going to dump another couple dollars. It just has what it looks like. But wouldn't buy anything tonight. Wait till 8:30. Yeah, so I think that's the move for tomorrow. I'm all cash on both accounts, technically. Both accounts were green today. I had so the plan is that we're going to be cashing out anything over the 8K balance in the Webull every week. So I think I'll do it. I'll probably just do it live every Friday afternoon. I'll just screen record my phone so you guys can see what I'm doing. But I'll screen record the phone if it's over 8K. Any number over 8K, I'm gonna take it out. So I think I'm up to. We started the week at 8K because the account was being transitioned from a margin to cash. I believe that's at 8K 877. So $77 as of now. If that holds, it's Wednesday, so we got 2 more days. If that holds or goes higher, we'll be paying ourselves $77. That's great. Whatever. So it's trying to bounce again here on Meta. I guess maybe that ends up being a spot. We'll see. But if you're gonna do it, it's a scalp, and you're cutting it off before the after hours closes, because I wouldn't hold that through. Yeah. Wish I was in a position when these moves hits by the way up and down. I mean, it's fun in the moment, but the FOMO. I've kind of felt that same FOMO. It's like I have felt so much better not having the FOMO, not having a much cleaner view. we've had 2 green days, I guess. So I felt pretty good. Let's see. I want to see a red day and see how I can handle a red day better in terms of coming at it no bias. I think that the coming at it with no bias on the red days is going to be so much easier when you're not already in long positions, right? For swings or for whatever the hell, you don't have any bias. You're not worried about something else. It's just what is happening right now. So we'll see how this goes for the next couple of weeks, at least into the end of the year. And it should be fun. I have the futures account too. I'm not super interested in the futures though. The futures, I think that I am, but I'm not. Like I don't care to be trading futures right now intraday because I would rather just trade SPY or whatever, or trade whatever IWM anyway. I got comfortable doing that stuff anyway, so I don't really care. But in reality, I think futures are probably better to trade. You just don't want to, you got to have a couple. I mean, when the time comes, I'll put ideally, more money in the account. I just kind of threw $100 in to see how it would go and just test things out. But you can't really trade futures, even the micros, like unless you're scalping, which I don't like doing. I don't like scalping 2-second moves. I just not, or 5-minute moves. I don't really care. I like looking at the 5, 15-minute, 1-hour charts to get my areas, and that's where I'll take the trades. And so in doing so, that means that your downside draw, sometimes is going to be like, a decent amount, which, if your account is at $100, you can't trade that account. Because a $50 down draw could risk liquidation depending upon the broker, right? So you got to have at least, I would say, like $300, $400, $500. So that's what we'll do eventually, come the time. But not interested right now. And I think that will be. I would eventually maybe move over to that instead of playing, SPY, and I would just do futures off of SPY, IWM, even the Nasdaq. Just trade the futures contracts instead of trading options. You don't have to worry about no time decay. It's cleaner. But I'm not gonna move my whole Webull account over to that, and it's not worth it right now, especially if I haven't touched futures until like this year. So get some more time under your belt. Only trade them in the after hours or overnights when things are slower, if you're gonna try to mess around, or at least practice, and then get a good feel for how they move and the pricing and your sizing, and then you can bring them to the day. Things are so volatile that you can be down massive in seconds off of just simply one contract. So we'll see though. When you predict your downside, it helps sleep at night every long. Yes. Oh, 100%. Yep. But I do very long and unhedged, but I do sleep very well. As long as you can sleep well, that's all that matters. You'll be ready and charged up for the next day. All right. That said, we're just kind of meta's down like 12%, just kind of sitting on the lows. The S&P, believe it or not, isn't really moving much. It's actually kind of slightly up in the after hours here. Let's go to SPY. It's actually slightly up. I would say that, until this level breaks, the bias is long, right? Because the trend has been up the past couple of days. So until this 181, this 381.50 area, or this zone breaks, which maybe happens tonight, tomorrow. Most likely, if it's going to break tomorrow early, it's going to come off the back of GDP or jobless claim news, all coming out at 8:30. So that's going to be a pretty interesting morning. And then we're going to get better direction. So if this news tanks the market, right, or drops the market tomorrow morning, just be aware, 8:30 a.m. Eastern time, so 7:30 Central, and whatever it's for me and whatever time zone you're in. Just be aware of, what's going on, and there's some data coming out. So that's a good time to not really, I don't really care about anything until after that comes out. That comes out, then you get a better feel. If that comes out and we're, ripping to the upside, okay, you're probably looking at dips for longs. Maybe not, because there could be some people who are scared about the Apple, Amazon. So you're in this weird shop. I think that, until you get a cleaner move, ideally underneath that 380 level, 378 is the next spot, and dare I say a bigger pullback to like 370, 367 could be in the cards if Apple, Amazon are bad, and the data that comes out is also, seen as bad by the market. Would be a healthy pullback at a minimum, dare we say, if it wants to go for more, or at a minimum that's going to be a nice, there'll be a good opportunity to the downside as well. So a lot to kind of unpack over the coming days this week, and then once we think you have it all figured out come Friday afternoon, you got the Fed on Wednesday, so they'll just come and just throw a curveball at you too. So that's the situation we're in. Hope it was helpful. Appreciate you guys, like always, for tuning on in. Hit the thumbs up button on the way out. Any I think it's possible. I think I said yesterday. There's a possible collaboration with some company that has some cool. I got to look deeper. I signed up and check them out. I've been checking them out. I'm going to do more of that research tonight. Some cool charting features and auto pattern detection and stuff like that, which is kind of cool. Could save a lot of time and make things a little bit easier if you're interested. So we'll see if that comes out. If that comes to anything, I don't really do any promotions here, but it might be a possible thing. So if you see it in the future, then that's what it is. Appreciate you guys like always, and I'll see you in the next one. Peace.